In Walmart's Who'Knewville, everyone readied their cart. Amazing Black Friday deals are about to start. Online and in the app, such great deals to explore. Everything you love from tech, toys, and more. The days to save and the ones to remember. It's only the 25th to the 30th of November. Set your alarms. Don't miss out. These deals are epic, without a doubt. The Who's are all ready, but are you? Walmart Black Friday deals await. Who knew?
Reality radio for a really great future. We're talking real money.
You know, I came to a very, very powerful realization recently. As you may be aware, I have been lately trying my hand at writing short stories and then narrating them on a new podcast I created. And it really bummed me because I'd gotten like only 4 reviews, like 5-star ratings on it on Apple Podcasts. And somebody gave me a 2-star.
What?
And it lowered my overall rating to like 4.4.
I didn't know Debbie knew how to do that.
And it bummed me out because I'm thinking to myself, maybe you could leave a little critique, like tell me why. But no, they didn't. Anyway, but then I realized I'm writing these stories and sharing them for my pleasure. Hopefully I entertain someone else with them, but I'm really doing it for me. And I honestly don't believe I am going to be the next Ernest Hemingway.
Your fishing's just not that good, I don't think. And you don't spend that much time in Cuba.
And I don't drink as much.
Yeah, well, there's that.
But no, I realize that I'm not going to be the best. I'm not going to be at a premier level. I'm not going to be a Pulitzer Prize winner. I'm just doing it for fun. I don't mind. In fact, I'm happy being good enough. Being just average.
Average driver, average investor, average lover. You're good in all those areas.
I'm good with being not special. And
you're not a maximizer.
I think that as investors, we need to do the same darn thing. You're not going to be Elon Musk. Thank God for you.
Okay, I'm glad you raised that. Where are you on the $1 trillion thing? Should he get the money or not?
I haven't even introduced the show yet.
I know, but I'm just curious. You brought him up. I had meant to ask you earlier. Should he be given $1 trillion? And by the way, if he doesn't, and he says, well, I'm not going to be interested in the company, doesn't he hold a large part of the company?
Yeah, that would be cutting off your nose to spite your face.
I told my wife, I said, that's just plain stupid because you own all those shares. Now you're just saying the company's worthless. That doesn't, anyway, sorry.
Okay, and this is going to upset a lot of the people who think I am a hateful, horrible liberal. I'm sorry to disappoint you, but I'm a real big fan of free markets. And if the board of directors and the shareholders of Tesla et al. Want to compensate somebody to that extent, okay.
I think it's dumb, but they can do it.
I agree. I think it's ridiculous, but it's not my call to make.
Well, it is kind of because you're a shareholder too.
Yeah, but I'm going to get outvoted. So
I'm not even going to vote.
Well, no, we don't get to vote because I own it as an ETF, so I don't get to vote.
I know. So
we don't get to vote. Nope. I mean, Avantis or Vanguard are voting for us.
Yep, exactly.
And they're whatever they decide is fine with me. So no, I'm ambivalent.
Okay, sorry,
I'm ambivalent.
That. I was just curious. Okay, I was curious.
I'm ambivalent
because my opinion is it's dumb money to give it to him.
Yeah,
but my guess is he's going to get it.
Here's the thing, though. Despite the fact that he's a raving lunatic. And I mean that only with love, Elon. Because you know you are. All you have to do is look at videos of yourself when you get on stage. All you have
to do is read that biography I read last year. Wow.
But you're a frigging brilliant raving lunatic.
That he is.
I mean, there have been few people in the history of business who have built better companies than crazy Elon Musk.
Isn't it still the biggest market cap among all automakers?
Absolutely. And come
crazy.
On. The dude's throwing rockets into space that are pure science fiction.
Yeah. I'm not going to get on one, but he is, yes.
Well, I'm a little old to get on one. I think it'd be bad
get on one if I was young, but okay.
I think it'd be bad for my neck. I don't know. If I was younger, I'd probably go to Mars.
Okay.
I think
takes
that'd be cool.
a long time to get to Mars, by the way. So.
Anyway, welcome.
You were
to
saying.
Sorry. Welcome.
I had meant to ask you. Don and I have a daily briefing where we go through a variety of things.
Except for yesterday when you were running at 1% of.
Yeah, no, you gave me 12.
12% of capacity.
And usually that was going to be a topic in the last couple of days because I'm just curious to know your opinion. So you brought it up today, and I had to ask. That's why. So I apologize.
Can I move on now?
You can move on.
Welcome to Talking Real Money, the show scientifically designed to improve your life and take you off in directions you never thought possible. We are the kings of tangentiality. And proud of it.
This is a really good podcast, though. I mean, not generally, but this
not
particular
generally. This one is.
This one is good. Actually, it's quite good because it's not our work. It's somebody else's work. And I think she's right.
Wait, who are we? Wait, we're the guys.
I know, but it's Christine Benz's article and she's smart.
We haven't even gotten to that yet.
I know, but that's why I'm saying. So don't give up on it because it's been a little screwball so far. You know,
the point was,
yes.
The point I was trying to make is,
please.
Mediocrity is not such a bad thing. Being average is okay. Go ahead. Do your thing now. I'm done.
This is so important because this comes up regularly with questions we get. Because oftentimes we say, well, that's a good fund. And then people think, well, I got to add that fund to my portfolio then. No, you already own that asset class. So this comes up a lot. And so Christine Benz wrote recently a great piece, and I think it's free. You can go to Morningstar. And the title of it is The Case for a Good Enough Portfolio. As Don said.
Good enough.
Being average is okay. Yeah.
Wait, that reminds me.
Oh, God, there goes the show.
Yeah,
okay. Yes?
Maybe since she's a big proponent of good enough, we should call her Gail Good Enough, kind of like
Gail
Boris Bad Enough.
Ooh, that's good. Yeah.
Like Boris Bad
I'll allow
Enough.
you to introduce her that way next March when she's at
I'm going to call her Gail Good Enough.
I'm going to step away from the stage when you do that, if that's okay. So I think she already got paid before then, so it's okay.
That's true. I won't care. When she leaves,
she'll get up and say whatever.
She'll be fine.
Those clowns. Okay, so she went to the Boglehead conference recently and found a divergence of opinion. People were asking her two different things far differently. What did I do this time?
I'm sorry.
I told you I'm at
when people say Bogleheads, I think Bogle bobbleheads.
Bobblehead, yeah. Okay.
I think they're all sitting around with their little heads.
Maybe they have those there. I don't know. My friend Paul Merriman spoke. We'll have to ask him. Yeah.
Paul Merriman was there, yeah.
Yeah, he was there. So she broke people from the conference into two groups: portfolio maximizers or satisfizer. That's what she calls them, satisfizers.
You stumbled all over that.
I know, because it's kind of an awkward. You say it. It's not satisfy. It's with a C-E-R at the end. Satisfizers. Okay, there you go. Thank you. Well, I should have had you do the piece. I told you I'm only at 20-something%.
No, you were over 50.
I know, but then I had to do a podcast that took my energy level back down. At any rate, she gets into this whole aspect of how some people want to refine, work on, she said she had questions about using laddered portfolio of tips funds, setting allocations to categories like small cap value and real estate, deciding how much of their traditional IRAs to convert to Roth, et cetera. Deep dives. Mm-hmm. People that really want to spend time on this, understand it, do it, et cetera, which is all fine. And she also said she asked, how many engineers do we have in the audience? And a lot of hands. I said at least a third of the hands went up. And that would be an engineer who would be into that kind of thing.
No offense to all of my engineer friends, but you guys, when it comes to overthinking, you're the worst, generally speaking.
Really bad. The second group, she says, does not want to spend a lot of time on those smaller bore issues. They're more of what psychologists call the word you just said a minute ago, had satisfy with a CER at the end. You said so nicely.
Satisfizers.
Satisfizers, yeah. Suffice and satisfy. They put those two words together. That's how
it'll suffice, and I'm satisfied.
Exactly.
Satisfizers.
It's acceptable rather than the best possible. And so she divides it into that. And we hear this a lot from people, a lot from you, because what about this? What about that? Finding enough funded contentment, or retirement lifestyle that has the lifestyle considerations, not the sitting around working on the portfolio, blah, 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 et cetera. You know that. And she says her bias is toward a simple, low-maintenance solution, which is your bias.
Oh, it's totally my bias.
Yeah.
Totally.
And you're managing your own money.
I don't want to deal with it.
Right. You're managing your own money doing that, right?
Yeah, but I don't work very hard at it.
I have somebody managing mine, because I don't want to mess around with it at all.
Trust me, they're not working as hard as you think.
As long as the money's going in.
As long as the money's going in. I don't care.
The catch, she says, is maximizing can take time, and not everyone is cut out for it. I'll add that here's the thing that I think when you look at it. It may or may not end up with you having more money. We don't know.
Actually, the data shows that it generally doesn't. The harder you work at it, again, generalizing, the less you're likely to make because you keep doing things. The key is maximizers are always trying to do something.
They see something else, and I got to add it to my portfolio. You brought this up recently.
When the satisfizers are people who just want it done.
Yeah,
do it.
There's that part.
Move on.
And she also mentions that satisfizers are generally happier overall, and maximizers are, and this is the part that's a problem, more likely to second guess their decisions. Right? Oh, I did that, but was that the right thing?
Because they believe there's a better answer.
Exactly. Which there may be, by the way.
Always a better answer.
How efficient can you make the efficient frontier? How much further can you push it?
Elon Musk is a maximizer.
True.
He's always pushing the envelope, and his rockets blow up.
Yeah, well, he comes in when they're doing the cars. No, you need to replace that bolt, this, that, and there on the assembly line. He's done that because I read the book. So that's an important thing for you to know about yourself, I think. And do you want to spend the time that way, where good enough decisions achieve a similar result with much less time and hassle? That's the key to me.
That's the
thing people overlook. They forget that there's a cost to all that.
I don't want to wait. I have so many things. And many of you have the same. You have so many other interests and things you'd like to be doing. Why are you spending so much money agonizing over minuscule potential and probably not even actual additional returns?
I think
it's like the tax things. It's like the constant obsession over minimizing taxes when you're going to pay them eventually anyway. You might as well stop worrying. They're going to come out unless you give your money away. And then is it really your money, or are you just kind of holding it for someone else?
Well, and again, if you go to Paul Merriman's website, I think you can find a 10-fund portfolio, a 4-fund portfolio, a 2-fund portfolio. I asked Paul once, which one's going to make more money? And he said, I don't know. You don't know. There may be a very good 2-fund portfolio where you have one globally diversified ETF and one bond fund that does very fine. So there's no guarantee more time, more portfolio work or planning will really help you create more money. That's what I would put. And then for most people who are going to do this on their own, I think the fewer funds, the better, because rebalancing becomes easier. It's less confusing. And again, you will not be second guessing your decisions if you decide to add something else.
If you have a broadly diversified, good enough portfolio that has all the bases covered, has a little bit of an academic tilt to satisfy all the engineers in the audience, then the likelihood is that you're actually going to maximize while minimizing effort.
And frustration.
Mm-hmm.
Yeah, time.
Don't work so hard at it.
At anything. No, kidding.
You can work hard at some things you like, or things that make you money, like more money. We work really hard at our portfolios when it's probably, the thing that's probably, at least for those of us who aren't retired, is making us the most money is our job.
Yeah, when you want to believe that additional work is going to make you more money. So that's really well said, Christine. And yes, she is speaking at Retire Meet next March 7th. So, all right.
I can't believe we had to move Retire Meet to March. It has always been. You were the one who didn't want to come out here in the dark in February, you said. Thing. No,
okay.
It's going to be, excuse me, it's going to be less dark in March?
Yeah.
By 3 minutes?
4 minutes? No, I think it's 4, actually. So
okay, 4.
That's 25% more than 3.
Considering, it's like total darkness. So, look, the sun came up. Oh, well, there it goes.
It's gone. Well, you can't actually see it come up until maybe April. All right.
From clouds.
Exactly. Norman from Silverdale, Washington writes, "Hey, Don and Tom, longtime listener, thank you so much for your great radio classroom and money talk wisdom. Saturdays and Talking Real Money have been appointment listening for me for years. Thank you very much." And by the way, he's referring to our live Seattle radio show, noon to 2 Pacific time, each and every Saturday, which you can listen to anywhere in the world.
Eastern time.
Thank you. Anywhere, and you can call us. That's the one place where you can call and talk to us live. Mm-hmm. He says he remembers listening to Don McDonald's show back in the mid to late 80s. Is that 1980s or 1880s?
1988 was the very first show.
Okay.
1988.
When did I come to Colorado Springs? Do you remember that?
1989?
It was 91. No, I think it was
91. 91,
yeah.
that's right.
Yeah.
Yeah.
Where Don put me on the air after he gave me several glasses of wine. Mm-hmm. Still surprised by
I thought it was funny to have a drunk Tom Cocker.
It was really, it was like, what? No, I'm not.
It was an overnight show.
I know, but it's still
everybody listening was drunk.
So I fit right in.
You fit right in.
Wow. He says he learned the lifelong lessons of risk, balanced asset allocation, and consistent long-term diversification. That's great. In 2017, he followed our suggestion, opened an account with Acorns. We haven't talked about Acorns in a long time. I like Acorns because it's an easy way to save when you don't have to save. It's a rounding service. In my 70s and with well-earned benefit retirement plans securely in place on my general investment accounts, IRAs, RMDs, and SSA squared away. Thank you, Roxy. So apparently he talked to Roxy. Acorns has been an excellent place to build a solid fund for emergency expenses. Like you, have no interest in crypto as an investment opportunity and have pretty much ignored Acorns' repeated offers to include BITO, Bitcoin Futures ETF. Do you know BITO? No? Shaking your head.
Wait a minute. Didn't he run for governor of Texas?
I thought that sounded familiar. A limited component of his overall Acorn holding. Long story short, about a year ago, I decided to go ahead and include a small holding of Bito in my Acorns account, not to exceed 4% of the value. When I recognized Bito is returning a monthly dividend of nearly 5%, I decided a small dollar gamble might be worth the limited risk. Here's my question. Acorn limits my Bito holdings to 4% of my overall portfolio value and apparently rebalances constantly with each account contribution or gain a loss. A quick glance, here's the part that's surprising, and I didn't get a chance to look this up. Quick glance at Morningstar data showed that Bito issues an annualized dividend of about 51%.
Huh?
How do they do that? He says, how's that possible? Certainly appreciate the monthly 4.7 Bito dividend being invested in my Acorns account. Don't understand the math.
All I know is that Bito,
I'm going to go ahead and veto Bito if that's okay.
Yeah, the ProShares Bitcoin ETF over the past 5 years is down 55%.
Okay, but does it issue a 50% dividend? I agree with you, sir. I don't know how that would be possible because
I'm trying to look, but guess what? Morningstar is really slow. Let's see. Bito. Come on, Bito.
Bito.
Whoa, look at that honking expense ratio.
It is?
95 basis points. Let's see. What do they got on distributions?
BITO.
Well, look at... it's in the form... Their dividends are in the form of short-term capital gains. They're 100% short-term capital gains. So if the fund's value is declining and you're taking out short-term capital gains...
Guess what's happening?
Then you're cannibalizing your asset.
The principal is decreasing.
And that shows up very, very clearly in its chart. It is pretty much a nonstop
You're eating
plummeter.
your own self to...
It's really, it has not been a...
So I was right a couple minutes ago when I said veto the Bito.
Yeah, as a matter of fact, even in the last year, it's been as high as, get this is what bothers me about cryptos. This just in the last 12 months, it's been as high as $28 a share, and its current value is just under $18 a share.
Wow. Phew.
That's just in 1 year.
Anything else, you would be so complaining and whining and hollering and screaming and yelling and jumping up and down. But no, this is crypto, so we're okay with volatility. That's crazy.
And how do they do this? Morningstar rates its portfolio holdings. Apparently, they have some. Do they have money in fixed income? Oh, they have some money in cash. Oh, this is a weird portfolio. They have money in cash. They borrow. Oh, this is just a silly, silly fund. This really is a silly fund. What's the volatility rate? I want to look and see what I can find on standard deviation. The standard deviation is about I only have 3 years. I don't have a full 5 yet.
Yeah, how much?
What's the S&P 500 standard deviation
15,
about?
16, something like that, yeah.
Yeah, you ready?
Yeah.
Hold on.
Standing by.
53.
I love me some volatility when it comes to crypto. All right, let's move on. Phil writes us from Boise, Idaho. I leave money that I want to use in retirement for the next couple of years in the SGOV ETF.
Mm-hmm.
Yep, that's the Schwab government. Yeah. Schwab government. Is this a better option than building a CD ladder?
Not Schwab. I'm sorry, iShares. I always want to say Schwab when I know that the S is iShares.
It drives me. Yeah. All right. Pardon me. Is this a better option than building a CD ladder in my money if my money is in a Roth IRA? Does this fund have stability? Well, the fund has stability, but that's not where you should have the emergency money in your Roth.
Well, the fund has stability, but the fund's maximum maturity for its portfolio is 3 months, which means that, let's assume for a minute, that the Fed keeps lowering rates. Well, your rate of return is going to decline because the return on short-term paper is going to be declining as short-term rates fall. The beauty of a CD ladder is that it goes out over 5 years, for example, which means that if rates on your 1 year CDs coming up go down, you still have a 2, 3, a 4, and a 5 at the previously higher rates.
Exactly.
So your average rate. So no, it's not going to work the same way. And it does have, while safe, it can have a modicum of volatility because it's not a money market fund.
No, it's not. No. But again, I wouldn't be holding it in my Roth anyway. The Roth is where stocks should be because you want growth, tax-free growth there. Anyway, so you need
you don't want that's the
review.
other thing. You don't want your immediate money in the Roth. That's a silly place to go.
All right, let's squeeze one more in from Seattle. Jesse writes us, I never thought ESG investing made sense, but it didn't bother me because I always choose to opt out of those funds. Now, I keep hearing rumblings about private investments being added to 401k plans, including target date funds, especially after the president's executive order about democratizing access to alternative investments. I'm increasingly worried about illiquid, opaque, high-fee, non-diversified private equity in particular. It sounds like these PE firms are trying to offload secondary, lower-tier investments onto retail investors and defined benefit plans. Now, even Vanguard is apparently considering these atrocious investments in their sponsored plans. Is this just the new flavor of the month like ESG, or should we be more worried about getting it forced down our throats? How can we fight back and keep these things out of our funds?
This is not, by the way, where the heck did target date come from in all of that? He conflated target.
Are they going to force private investments, private credit at all into target date funds?
Into target date.
Yeah.
My guess is not. They're good. They're an option.
That would be a tough sell, but they're going to have those funds. I think are going to be available in many 401k plans. Yeah,
but we've already begun to see the potential of a private equity meltdown, particularly in some of the private credit funds.
Yeah,
they have really been.
They're jittery right now.
Their dangers. And I think he broke the code. I think that the pressure on the president is coming from those who produce private equity products, who want to offload more of their garbage on the general public so that they can get out. And who's the next buyer? Well, if you run out of high flyers, then the next buyers are the low flyers, which is
the greater
most
fool
of us.
Theory applies.
Greater fools. Got to have a greater fool, and then finally,
guess what?
I would not. But the good news is I still believe it's going to be optional.
Yeah, no, I don't think it'll be in a target date fund, but I do think it'll be part of your benefit plan. Yeah, well, not all of them, but some of them.
Yeah.
No different than some plans now offer annuities. Not
More's
many.
the pity.
Yeah, but so yes.
Okay, now I counted this time. That was 3 questions.
I know because they were a little longer. I only did 3 this time. So
okay, because last show you told me that it was 4, and I thought it was 3. So
yeah,
it was
well,
4.
I'm now still operating in the 60s somewhere. So, and I think after doing these 2 podcasts, I'm back in the 40s. So I do apologize.
That's all right. You've got the nap couch out there in the lobby.
Boy, I wish I'd. You think that's good when people arrive? Who's
that's
that?
Good for business.
That's the regional director.
That's
He's taking
the director
a
of the
snoozy.
company. He's taking
whatever.
a nap.
Okay, what is this, Mad Men or something? 2 drinks and a quick afternoon nap? Come on, stop it.
Hey, they call it a siesta.
Okay, well, call it what you like. It looks rather bad when they come in the front door and see you there. So thank you for all your questions, by the way. Thank you for all your calls. It's been fun the last few weeks talking to so many of you. And guess what? There's still time before the end of 2025 to get your plan done, to get your portfolio reviewed, all of those things by going to talkingrealmoney.com. Click on Meet an Advisor.
Oh, and by the way, at the beginning of the show, I used my my short story podcast as an example.
Which are really good. I love the Counting Crows one.
Did you like Counting? Or not
I
Counting
love
Crows.
that.
It's called Murder of Crows.
Yeah, it was very good. I got to listen to another one. I just got to remind myself. So
I'm in the middle of writing a 5th one that I really like. It's about a talk show host.
Yeah, if you're going to write one about me, don't use my name.
No, it's about an old-time talk show host.
Yeah, exactly what I just said.
Yeah. No, but I wanted to thank somebody because I mentioned the 2-star review that bummed me out.
Yeah.
Then the next day I went and looked, and I got an actual review from one of our listeners here on Talking Real Money.
Oh, that's nice.
And so I want to thank Always Learning 1953 for the lovely review.
The stories are good. They're entertaining. They're well spoken, well written. So yeah,
again, they're not the best. I understand. I'm not sure why I got
sound effects in there too. I like that.
Well, that's only in Murder of Crows. I had to do it in Murder of Crows because the crows are so scary.
Yeah, they are scary.
They're just amazing.
I see one, I run for cover right away.
Should. They're very scary critters. Yeah. But the podcast is called New Tales Told.
New Tales.
It's on your favorite podcast service. I'm trying to get Apple to feature it as a new podcast, but so far, not yet.
No dice.
But I have 4 stories there as of this one, but by the time you hear the show, I'll probably have 5, maybe 6. 3 of them are about murder.
There's a method.
One's about a dog.
Message.
One's about a dog.
All right. Well, that's good.
So,
every show needs a dog show. It makes sense. People love dogs.
I love dog story. I don't know why it is, but on my other podcast, Lit Reading, I did I think it was, who did it? I think it was No Henry. I don't know. It's called The Yellow Dog. And it was such a wonderful story. I went, I love this. I got to do my own dog story. So it's not, mine isn't nearly as good, but I tried.
Yeah.
Thank you all. Thanks for being here. We're coming up on that 30-minute mark again, which is always our goal for these podcasts. And if you have questions, send them in to talkingrealmoney.com on the contact form. If you want to talk with us in real life, call on Saturdays starting at 3 p.m. Eastern, noon Pacific time. Central and Mountain, come on. Just add or subtract.
Who knows? I was going to say.
A digit.
Sorry.
You'll figure it out.
Flyover USA, you'll figure it out. Isn't that what they call it? No?
That's flyover country.
Okay, okay, just checking.
Yeah, those of us who lived in Colorado kind of felt bad when you guys called us that, but we thought we were a destination.
That's more for my brother in Indiana than anybody else, so I do apologize.
Kansas, now, yeah, but
that's real flying over.
Thank you all. I'm joking about Kansas. I used to live there.
Here come the calls, the letters.
I used to live in Leavenworth, not in the facilities there.
He's been paroled. It's okay.
I was a child.
I'm sorry.
I was a child. Okay, we got to go. Thanks for listening. Take good care of yourselves. And remember, almost every day, we're here talking about all kinds of things maybe things we shouldn't. And we're talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor. Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services. Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.